You know, analysts had been lowering their estimates, but why did they go so far? What did they get wrong?
I think if you look at this set of results, the big drivers were a strong result out of our downstream business, which was helped by oil trading. That would have been something the analysts could have been able to track. Rosneft has come in with a really strong set of results of $800 million after tax. And then the mix wasn't quite as bad as we expected, which has actually led to a lower tax rate than we first anticipated, and what indeed we'd actually signaled to the market 2 or 3 weeks ago.
It looks like you also have had a very good year in trading. What's going right there? Can you give us some insight as to what is giving you the edge here? I
think it's a volatile market. In fact, actually, if you look at the gas, I was on the trading floor last week, and gas volatility is running up around 85% right now in terms of natural gas. We're seeing similar sort of volatility levels in oil. It is fairly finely poised right now. If you look at where the oil markets are, we're sort of range bound between $55 to $65 a barrel. There are clearly still US-China tensions in terms of where the direction of the oil price may go from here. It's pretty stable at the moment, but I think basically the teams have been making some pretty good calls mostly around the structure of the market and what we expected long-term structure to do into this year and next year.
Brian, good morning to you. Let me ask you a little bit about the balance sheet side of things and the gearing, because this has been a long-standing ambition to get that gearing down, hasn't it? I think 30% is the level you aim for. It's staying stubbornly high, 31.7%. What can you still do to bring that down?
Yeah, so if you look at why gearing is where it is we've paid out something like $18 billion of payments to Deepwater Horizon settlements over the last 4 years. So that's actually, if you took those out, our gearing would be around about 22%. What will now bring the gearing down is, first of all, net debt stabilised this quarter on quarter. So Q3, Q2 is flat in terms of net debt. The $10 billion disposal program we announced, of which we've received only less than $2 billion of proceeds so far. As the balance of that $8 billion comes in, net debt will come down and then gearing will track down as well. The other part of this is also the targets we've laid out to 2021 have operating cash flow significantly above the amount of capital and dividend that we need to pay. So that surplus cash will bring debt down even further. But by the end of next year, we should be back towards the middle end of the range.
And can you, I mean, asset sales is always the thing that springs to mind when you're talking about a business with a gearing level it wants to bring down. Can you update us on your US onshore assets and the sales that you're doing there, the buyers, the conversations you're having?
Yeah, so we just got 2 more packages away this quarter. We've taken some impairments, loss on sales associated with those because the natural gas price is so suppressed right now and probably will continue to be suppressed over the next 2 or 3 years. So we're still getting pretty good multiples in terms of future earnings of these assets. We still have a very broad buyer pool. It's typically private equity. That brings with it all sorts of issues in terms of finding ways to close those deals, but we are getting those deals closed. We still have a couple of packages out there, but we announced the big Alaska divestment for $5.6 billion last quarter, and that's made a significant difference now that we're now confident in saying actually of the $10 billion of disposals that we promised over 2019 and 2020, we will have announced pretty much all of those this year by the time we get to the end of 4Q.
Okay.
Can I ask you about the comments we heard from the U.S. Energy Secretary yesterday? Rick Perry said that the globe is awash in crude right now, and that the U.S., he seemed to intimate the U.S. had been underestimated in terms of its production capabilities. What do you think about the supply side? How do you see it?
Well, the US in particular has been probably the most prolific basin we have seen over the last 5 or 6 years. Production now approaching 13 million barrels a day out of the United States, which is quite extraordinary, actually. If you think about when I first traded oil back in the early 90s in the United States, we were down to 6 million barrels a day. So it continues to be a prolific province. We're starting to see some back pressures in terms of production, although the rig counts are down. Production is sort of firming up, but there are some concerns now. And although people have been predicting this for the last 4 years, that we may start to see oil production out of the United States, particularly the lower 48, start to flatten out. We're not seeing any major signs of that, but we are seeing activity back off. Oil prices around $62 Brent, $57 TI. Right now, I think what you're seeing in terms of pricing is if you get resolution of Venezuela, maybe some resolution around Iran, or we continue to see trade tensions with the US and China, that will continue to soften demand. Demand coming into this year was around 1.3 million barrels a day. By the time we got to the middle point of this year, it was down to 1 million barrels a day. Now it's probably below 900,000 barrels a day. And that's putting pressure on the price, which will really sort of signal what happens now in terms of the OPEC meetings coming up.
Brian, do you sense, we're seeing change at the top, of course, of BP shortly. Your long-standing CEO will be leaving the business, of course, and Bernard Looney stepping in. What can we expect that will be different, specifically around climate change? I want to ask you about, because you're under pressure from some of your partners in the world of theatre. I know that you've stopped sponsoring the RSC, for example, a group of MPs pushing for divestment of exposure to oil and gas stocks. What will be done differently under the new CEO on climate change? I
think what you'll find with one is we've gone through a pretty good process. I think Bernard will be very progressive and forward-looking as we go into this debate. But Bob really started the big discussion around energy transition. I think you'll see Bernard leaning heavily into that, and we will be laying out some more about that as we get into the early new year next year. As Bernard takes over in February, he will be coming out to the market probably in the first quarter of next year with some guidance about how we're thinking about the company going forward and what our ambitions are in the low carbon space. But we've already done a huge amount over the last 2 or 3 years. We set out a framework last year that talked about reducing our own emissions. We've now taken 2.5 million tonnes of that 3.5 million tonne target out, and we are on track to deliver the 3.5 million tonnes of CO2 reductions by 2025, probably well ahead of that, but there'll be more on that as we get to the end of this year. We're also looking in terms of improving our products, and you saw the announcements that we've made already this quarter around Diddy and electric charging, and the desire to be at the forefront of electric charging as part of that big transition. And then if you look at plastics and what we announced this week around recyclables, and those really difficult, hard to recycle plastics, we've announced a plant around that in Chicago. So we are leaning on all fronts, and I think you'll just see more of that from Bernard going forward.